Hey guys, welcome back to another video, and today I'm going to show you how to trade up an evaluation account on Apex Trader Funding. So I will show you my trades that I did, and I will show you our video which is in German, but I will translate a bit, and so that you can also learn how to make some trades like this. And I would say we start with the first trade. So if you want to make an Apex evaluation too, and if you want to buy an account, you can always use the code ALFA for the best discount. So you will get 80 or 90%, depends on the sale they have at the time, and also you can always have the 1 day pass. So that means that you can trade your evaluation in 1 day and will be funded the next day. So our first trade, or the first trade that I did, with the breakout under the pre-market low, because we saw that the candle was very strong. We had a fake on the bottom and on the top, so we had an absorption here over here, as you can see, and then the break under here, under our level. So I did a short, and my level was the previous day low. So my target was the previous day low, because there is the liquidity laying. And as you can see, the trade developed really fast, because it was a cash open run, we so call it in our setup. And as you can see here, I'm explaining to our mentees in Germany that we have a balance phase, and we had a double fake, and after that we had a breakout, and we had a setup, or strategy or setup was going to get worked here. So I opened a short, and my target was down below in this zone, and as you can see, the cash open run came very quick, and in our zone he then stopped. Also, as you can see, the market stopped because here much liquidity got taken out, so many take profits were laying here in that zone, also mine. So this was a very good profit. I think it was $600 or $700. So what we can learn from this example is that the cash open always has much more volatility than the pre-market phase, and also we saw that the pre-market didn't have much movement, so the daily average range was not fulfilled yet. And also we had a double fake here, and we had a balance phase over here, and then we broke out. So it was a very, very quick trade. And also what you always have to remember when you trade a breakout, the breakout has to go very, very fast, because a breakout is a trade, or a trade structure that has to really develop very fast, not like a reversal where it can take some time, but the breakout, it really has to go and to stop everything out and to move very quick. So it was a very good breakout until our level got hit. So that also would be a learning for you. You always have to have a target which is realistic. So the daily range, I think, was down here, so we had enough potential to target our zone. Also we had the liquidity to get out of our positions here under down there, so everything worked perfect in this trade, and I can't complain. So our next trade was the reversal, and the GC market, the gold market, was very long, because the correlation from both of the markets are controversial. So if the S&P or Nasdaq goes down, the GC sometimes or oftentimes goes up. So because it's a risk on or risk off scenario, and in this example the market was very long in the GC, but also there we have a strategy where we trade very quick reversals, because the market is overbought. And in this example I traded a reversal. We have here Bollinger Bands, RSI, and some other indicators that can indicate us if the market is overbought or oversold. And in this example I traded the reversal down here. We saw that in the footprint chart a few aggressive sellers came in here, down here, and also we had the absorption over here, so that the level here got rejected. What you can also see, it's not a very good form of up movement, because here the volumes always goes up but also gets accepted, and the previous volume gets denied by creating fewer volume in the next candle, and so volume rises, and in this case here, up here, the volume gets denied, and then the market does his reversal. So when you see aggressive selling down here where we hadn't much volume in the previous candle, also it's a M15, so 50-minute candle chart, and we see that we have a one-way auction, so the market just moved up with no correction. It's very likely that we will have a quick correction, and our strategy says that we always have to take 40 ticks as take profit. So that's exactly what I did. You can look up here. And the 40 ticks, they got hit very, very quickly. So with 2 lots, I entered with 2 lots, would be $800, and the P&L for the day was 1,615. So would bring us to 51,600, and would always be more than 50% of the account. So as you can see, that the first day was very, very nice, because market gave us many opportunities. Then I did another trade, which I don't want to be here. Okay, so you can see the market did his reversal, also more than 40 ticks, but then what happened is that we had a fake down here. We grabbed liquidity. You can also see in the footprint chart in the delta that this is not the end of the day high, because we have probabilities for that, and end of the day high usually forms with the double top or double bottom, and this was not the case in our scenario. So I saw that in our footprint chart many got stopped out, which is normal in this reaction, and then we came back on top with aggressive buying here, what you can see, and formed very good low for this kind of fake, and then volume rises up again. So this was my entry over the second green candle here, when I saw that here in this compartment of the candle aggressive buying came in. I positioned myself too, and this trade, I think I trade my stop loss until under this balance, and then got stopped out with, I think 33 ticks. So then I did another trade in the S&P 500. I thought that the market is gonna come down again, because we reached my previous level, so a previous low from our balance, which we broke out of, and then I wanted to trade the reversal up here. Yeah, sure, we had a fair value gap, as you can see, but the POC, as a point of control of the volume, and everything else, which was very interesting, developed down here. So volume got lower, and the prices down here were accepted, so I wanted to trade a short. But as you can see, the market didn't want to do it, so it took some time, and didn't work very well. This was the next day. I will just show you quick, where did I get stopped out. So I think here in this example, I got stopped out over the previous candle. Yeah, so I got stopped out over the previous candle. So brought us the day. I will show you quickly what the market did. But I think the day ended with like 1,700 in our pocket. I will just quickly look up what the market did. So yeah, this is a moment where I'm gonna cancel, because we got our top broken and aggressive buyers came in here, as you can see, where I get out. So the 300 market buying, and because of this fair value gap, and Nasdaq was a bit lower, and S&P was stronger, I thought, okay, I'm gonna get out with a very good trading day. So total of the day was 51,835 for the first trading day. Not too bad. And now let's look up what the next trading day has to offer. So in this example, you see that the market from yesterday, like I told you, in the DC was very, very long. And so we had a one-way auction down here. But what you also can see is that we have the most volume created over here, so on the top edge of the market. And oftentimes when we have that, it's a sign of a liquidating, so that the market wants to get liquidity down here again to rise up again the next day or the next day. So yeah, I thought because we also here have a previous day high fake, which has a very high probability of trading through the entire value area from the previous day. So I will quickly explain to you. If this actual day here breaks above our previous day high, which he did, and then enters again and can't close above, and that means that the market really wants to trade through the entire value from the previous day. So my idea was to trade through the entire value and to trade a breakout down here, because the market gave me some signs and created volume also with aggressive selling. I think I will show you in a quick example, but then I got stopped out over here. So what you can see, my breakout plan didn't go as planned and I got stopped out over my previous entry candle. I oftentimes use the M15, so 50-minute chart, to identify my entries. So in this example, I was too early. I also didn't trade my true setup. So in my setup, the market would have to close under this line, so under our zone, to fulfill the breakout, but it didn't, and I got in too early, so it was my fault. So my idea was still working. I still was looking for shorts, and then I saw another reversal on top of the edge here on the bottom, of the bottom of the value, sorry, which I got in here. And then the market took some time and then finally gave us the breakout I was looking for. I got stopped out trading here finally, what I'm gonna want to say. So I was trading behind our lows and highs and our balances inside the candle. So a quick tip from me, also what you can learn in this video, is that you always have to look, if you're using the footprint chart, what volume does show you. And in this example, we have volume which comes up a bit but doesn't get accepted on here and then falls again. So I am a fan of always trading behind high volume nodes or high volume constellations like this, because this gives you a very safety net and a space where you can trade your stop loss like a shield. So you can imagine that this is your shield for your trade, and the market oftentimes then gets rejected. So I was trailing and then I got stopped out because I was trailing a bit aggressive. As you can see, I was trailing here behind my shield and then got stopped out like on the tick, but no problem. I was waiting again and then again for my breakout. Here you can see where I trade, and also what I told you here, our shield got all held very well, and then the market continues to go short. So I decided, okay, the initial move from this day is not or was not created yet. So I thought, okay, I'm gonna trade the breakout again. And this time it happened. We saw many aggressive selling going on, and so the trade, I think, was also very quick in happening. Yeah, so I got out here on my zone from this previous technical level. So what we can say is, we have the 80% probability to get down here to our previous value low from the previous day. But also I wanted to show some more trades. So yes, this was a very good day, and I think the day ended with $500 left to trade. So the last day and one of the last trades, it took 3 days to trade up the evaluation until we would get funded. Also, I wanted to show many trades. What you can also do is to over leverage a bit, go in with many contracts, and I think this was the profit target I needed to get my evaluation funded. What we saw was another, like in this example, a cash open run to the bottom until we hit the liquidity here under the previous market or until the pre-market, under the pre-market low, and then we saw that liquidity was shifted. So many guys took their take profits down here, as you can see, and so I wanted to trade the quick reversal because we had a fair value gap. Didn't go as planned, got stopped out. But no problem. I got stopped out down here because aggressive sellers came in down here. So this was my stop loss, and also was my first day of the first trade of the day. So I always go a bit slower. Then the second trade was again the reversal. We traded up here when I saw aggressive buying up here. Yeah, then the typical daily low formed, and we had the double bottom reversal. I was a bit greedy in this example. I should have moved my stop loss here and get in again here. So yeah, but the trade ID in the analysis was on point. So I had no doubt that we have to, or that we will make the reversal. And then I trade under the 1 minute chart. I looked what the order flow indicates me. Yeah, this was my stop out. So got stopped out very, very badly. So had no luck on this day, but no problem. Sometimes it just has to be like this. And yeah, then I trade and trade until I only had, I think, $200 left. So this was my initial take profit to get funded in my evaluation. And then this happened. So one tick above and my evaluation would be funded. But the market wanted me to make another trade. And so for like this, I got stopped out, like you will see, with my trading strategy. So yeah, sometimes it's like this, but so in this case I had to make another trade, and so I did one trade here again. So as you can see, I got stopped out here, and the theory of making the long was still good because we had a balance phase, and balance phase is always created with the double bottom or double top, or many tops. And this was my side phase, so the top was created here and the down or the bottom here. And as long as we do not close in this compartment of the zone, so in the zone and then come up and down again and break through this initial candle which came in our zone, I don't want to go short. So my long was very much just a technical higher high move that I wanted to anticipate. So yeah, I took a long after this reversal candle over here. Took a bit of time, and then the market finally came to my level. And also, as you can see here in this example, 1 or 2 ticks again to get funded on my evaluation. But sometimes you really have to wait. So the next candle yeah, comes down again, bids up again also, and then our take profit finally gets hit. So yeah, we see, yeah, I blurred my other accounts, my other PA accounts, because I'm trading the following manager. But as you can see, the Apex, our Apex evaluation account now was at 53,000. So we did get passed through our evaluation with these trades. And the learning of this video, I will show you in other videos too. This was just a video because I thought in Germany the audience was very good and the feedback was very good. I hopefully you could learn a bit from this video too. But to always definition a target, to always manage and plan your trades properly, and to not get emotional if the market sometimes stops you out, or to trail your position until you get stopped out in trading or your target gets hit, because we have a trading drawdown in Apex Trader Funding and many other prop firm companies, and this makes it much harder to be consistent, because your balance, your drawdown gets thinner, even if you get stopped out break even, but the trade was in a positive. So yeah, thanks for watching. The next video I will give you some better tips again, and I would be very happy of a subscribe and the thumbs up. And also, if you want, you can use the code ALPHA, like I showed you in the beginning, to get the best discount on Apex and to support this project here. Like I told you, I want to practice my English, which yeah, will take some time, but no problem. I don't have stress. I will continue to make these videos. And so yeah, hopefully you enjoyed it, and we see us in the next time. Bye.